August 25th, 2021. SPY is up 0.19% today. It did trade to nominal new highs. Well, it is trading at all-time highs. And this is so strong, this huge move in the SPY continues to be so. And I coined a term yesterday, TINA. There is no alternative. There's just the mega cap stocks are going crazy. Now, what we're looking for, though, is perhaps as the FANG stocks and such, the mega cap stocks, start to get fairly valued, that we'll get a switch into some of the other stocks that we're trading. And actually, we're starting to see, some sectors really taking off, and in particular today we see biotechs going. So that's encouraging for the stocks that we trade. I did want to talk a bit about today as well, the Fed meeting coming up in Jackson Hole. So what that means is, what they're going to discuss there is the ongoing tapering of the bond purchase, asset purchases by the Fed. So they've been talking about this since March, really, maybe more so around June, and the market has already priced in comments to come from the Fed about tapering. It's probably by the end of 2022, tapering will be completely finished. But we don't really need the economic stimulus anymore, because the markets themselves, or the economy, has recovered very strongly. So Fed tapering, what does that mean? Well, the quantitative easing, they put money into circulation to keep interest rates low. So they buy the bonds. And with strong demand in bonds, prices go down. Interest rates go down, prices go up. So the Fed buys the bonds. In a sense, it's just moving from one hand to the other, but they are two different parts of the puzzle. They put money into the system by buying these bonds, and that keeps interest rates low. But it also fuels a lot of things, and one of them is inflation, which we've seen. Now, the Fed is saying that inflation is transitory, and that because we were so beat up in the pandemic, there's bound to be a rebound, but it's not going to be a consistent amount. They're still looking for a target of 2%. Even though inflation on a year over year did spike to between 4% and 6%, but that's, there's a saying that if rates go from 0.25% to 0.5%, that's up 100%. Yeah, but in real terms, it doesn't mean anything. So, if you get inflation going from zero or negative to 6%, obviously that's a huge pop, but it's not unmanageable. It's not out of sort of the range that you might expect when you get a strong recovery. So Feds expect them to say rates will remain unchanged, that the bond market they'll continue to taper, but this is all already priced into. I don't make this stuff up and just say it. Obviously, I read what other people much smarter than I am are saying, and so this is the market sentiment, but it just continues to. Look how strong this market is. It's just crazy. But Tina, there is no alternative. The NDX here it's flat on the day, but it had traded to alter. Look at the big surge this took 3 days up. Now, maybe needs to consolidate a bit in here, but it did bounce off the 50. We noticed that on the SPY as well. Every time the market trades off the 50, it bounces. And this also coincides with the McClellan oscillator getting into an extreme oversold position. Now, it does, it seems to be, pretty consistent, this pullback. but it does make higher lows. So obviously a big, strong rising channel. The Dow is up 0.23 here this morning. Also bounced off the 50, bounced off the trend line. Maybe coming in the apex of a wedge. Tranny's up 0.58. This is consolidating in here. Had this 5-wave move down, 5th wave consolidation, popped up to resistance, failed, pulled back. Maybe now it's, making higher lows. And we have to fan this out like this. Maybe that's our new, what it looks like now. We'll see. It needs to get up through 15,000 here, 15,4, 16. We would like to see the transportation index confirm the big moves on the other markets. The financial, so let's look at the ETFs that we follow. Financial statements. The financial sector popping out here, trading back almost to all-time highs. 127.90. It's 127.12. So just short. What was it here? 128.13. So just $1 short of all-time highs. If this busts out through, this 128 area, this is going to trade to 136. You could actually look to add. This is a big reverse head and shoulders pattern. Maybe a cup and handle would be a better way to describe it. Here's your cup, here's your handle. That's a major breakout. So what this is also indicating for markets is that we could expect, with the Fed's tapering, we could expect interest rates to firm up from their current levels. Even though the Fed's going to hold interest rates at near zero, the bond market itself will start to price in a bit higher interest rate. And this is good for the banks. Banks make much more money with higher interest rates. Not necessarily good for the economy, but if you have a very strong economy, you can handle higher rates. Not a lot higher, but still, I mean, under 1% is still so cheap money. I mean, it's just absolutely, you can borrow money all day long at 1% and should be able to repay that. The only thing is that the problem with higher rates, though, is that the Fed, with such a huge debt now, putting on trillions and trillions of dollars through the pandemic, can't allow rates to go too high because they need to pay them back. They need to pay back the they need to pay the interest on the bonds. So if rates go up, it could be detrimental to the bond to the Fed's trying to maintain a liquid balance sheet, because they have to roll bonds come due. So if you sell bonds to the market at 0.25% or 0.5%, that's your rate of interest that you have to pay for the length of the bond. Now, if that bond is a 10-year bond, well, it won't be a 10-year bond. Let's say it's a 5-year bond or a 2-year bond, then you're fine. But when you roll that, you need to go to the market to fund your government. And if the 0.25 comes due after 2 years, you have to go back to the market to replace that. And if rates are much higher, the Feds are going to run into some trouble trying to maintain their interest payments. That'll take up a big chunk of their of the money that they for their budget. But one of the things, there is some other big strong economic theories about how the dollar being the world currency, and that actually is one of the biggest exporters that the U.S. has, is their dollar. It's much too difficult to try in the short period of time that we have here to talk about, what that all means. Suffice it to say that because that's their biggest export, there will be demand to buy U.S. dollars, and so in buying U.S. dollars, quite often that is shown in the purchase of bonds, the U.S. Treasuries. And so though the Fed may be tapering their buying because the U.S. exports so much U.S. dollars, there still will be maybe not as much pressure on markets to price the bonds higher, the Fed bonds higher, U.S. Treasuries, because there's such a big demand for U.S. dollars vis-a-vis the bond market. So what does that all mean? It means that markets are going higher. The bull market is well in place, and we should see it continue to go. That's my theory, and I'm sticking to it.